So over time, in terms of like payments we facilitated through digital assets, we've now served, $70 billion, I think about 40 million transactions. I really think that this next year will be a huge breakthrough for stablecoin based payments. And we started to see some really interesting market recognition of that opportunity last year. For example, Stripe acquiring Bridge is probably the big moment, but lots of those players, like we're really seeing take up of that use case.
Welcome to Tokenized. My name is Simon Taylor. I am your host of the Tokenized podcast, author of FinTech Brain Food, and head of strategy at Sardine. And joining us today is Monica Long, the president of Ripple. How are you, Monica?
I'm very well, Simon. Happy Friday.
Happy Friday, yay indeed. Excited to have you on the show. I didn't realize that you've been at Ripple for 11 and a half years. Has anybody been at a crypto company longer than you? Like this, are you in the Guinness Book of World Records yet?
I hope I'm not. I'm surely. Well, our CTO, David Schwartz, he co-invented the ledger. And so he was one of the early employees of Ripple, and he is still with us doing his thing. So I think he's the most tenured guy at the company.
I think every now and then sort of prices of crypto tokens move and everybody pays attention again and forgets that this was sort of 10, 12 years in the making a lot of these times. So there's a lot that's happened. Of course, we need to remind listeners that views and opinions of contributors are not necessarily are their own and don't necessarily reflect those of companies they're representing. Nothing we say should be taken as tax, financial, or legal advice. Please do your own research. And with that, why don't we start, Monica, by explaining what is Ripple in 2025? Because you probably get that a lot, but you do a lot these days. So help me understand, what is Ripple today? What is XRP, the ledger? How does all of this separate?
Yeah, happy to. So you called out, Ripple's a 12-year-old company. So I haven't been there for the entirety of the time, but it is one of the OGs in the crypto blockchain space. I would say there's been chapters to the story. So very fair to say, in 2025, where are we in the novel? What's been consistent since the very beginning is, and I think that's why this is the reason a lot of us are in this space, is Ripple as a company and team of people, we've always had this foundational belief: blockchain is the future financial rail. It's the thing that's going to modernize the financial system and make lots of activity, transactions of many different things a lot more efficient, and will spawn new use cases. So I would say Ripple, present day, we are contributing to that industry-wide vision for the future in two ways. One is a set of software that we provide to primarily financial institutions now. I would say it's enterprise ready though, so it could be beyond that in the future. In this set of infrastructure software, it enables them to tokenize, store, move, and exchange value. And so that includes, our primary use case around payments. We can talk more about that. It includes digital asset custody. And then as kind of a oil to the machine, stablecoin called Ripple USD. The second way in which we contribute to that future is through our continued work on the open source code base of XRP Ledger. So this is a public blockchain. I believe it was the first alt-chain to Bitcoin. I know Litecoin launched within, I think, a couple weeks of XRP Ledger, so I don't know which one was first, but it was definitely the first alt-chain to launch with a novel consensus mechanism because it didn't use proof of work. And so we continue to contribute code to that blockchain. And then we also, support other developers building on it. So that's through, grants programs and developer toolkits and that kind of thing.
Yeah, it's kind of the split between XRP, the ledger, and Ripple, the company.
Mm-hmm.
you see a lot of people are probably familiar with the Ethereum Foundation and how it works with the Ethereum ledger, but then also there's Consensus and there are many other businesses in that ecosystem. But you also see foundation funds a private business to do some work like you would see with Uniswap. So that model is one that I think is always, people don't necessarily understand that distinction and it's not very clear. So I appreciate you calling that out. Talk to me about, let's double click on each of these: payments, custody, and stables. What is the payments business today and what does it do?
So we help primarily licensed payment service providers. That's our main customer. I would say in 2024 and now in 2025, if I were to give you a subsegment of payment companies, we increasingly are serving crypto native companies, so centralized exchanges and other kind of crypto forward fintechs or PSPs. So for them, their need is efficient cross-border transfers. So in some cases, the customer is moving, a stable coin into a certain country, and we provide the exchange into, say, Thai baht, and then the payout into the local account. We started on payments many, many years ago, and you'll remember, Simon. I mean, you were there at the ground level. We were serving large banks, and had a different kind of product that we were bringing to them. So over time, in terms of like payments we facilitated through digital assets, we've now served $70 billion. I think about 40 million transactions. I really think that this next year will be a huge breakthrough for stablecoin based payments. And we started to see some really interesting market recognition of that opportunity last year. For example, Stripe acquiring Bridge is probably the big moment, but lots of those players, like we're really seeing take up of that use case.
When I speak to operators, it's a good friend of mine works over at Sling Money now. She used to work a lot in the African ecosystem and was saying that Bridge is there, yes, and BVNK and many others sort of providing connectivity, but Ripple's right there. And with Asia Pacific as well. So in this is there a real business, 70 billion of volume, 40 million transactions? It's meaningful. That is a meaningful payments business. And now people have started to come around to the idea of stablecoins. But what people forget is what you were saying, which is, yeah, but how do I get out of stablecoins into local currency? And what does that connectivity look like to that?
Yeah, I would say too, Simon, like that's been the use case, the utility of a blockchain as a global payment rail out of the box, fast, friction-free, very low cost. If you're using something like XRP Ledger, it's near free in terms of transaction fees. That is obvious. What has been hard and what's taken many years is sewing together the blockchain with the existing domestic payment rails. And part of that is technical, but an even bigger part of that is regulatory. And so that has really been the hard, heavy lifting we've done, brick by brick over the years. There was a turning point at which, we wanted to be a pure software provider for a long time. And there was a turning point at which we realized, to really serve the customers well, we would have to get licensed. We had to enter the flow of funds. So that's been, I think, another kind of key asset that maybe not so well known or appreciated about what we're doing.
Well, I'm a payments guy, right? So I come from that world of going to Cybos and going to Money 2020, working with those businesses where the last mile is the hardest. With crypto, often the first mile is the hardest, like just trying to use the thing. But with payments, it's with a blockchain, you can get it all the way there, but can you get it to the last mile? And that's a real grind that people definitely underestimate. And so, yeah, it's kind of a hidden world. So the payments business, I now understand. Talk to me about custody, because this is, you acquired Metaco, I believe. Was it 18 months ago, 2 years ago now? It's flown by.
Yeah. Oh, yeah. Yeah. About 18 months. It's coming up on 2 years in May. So it was 2023. Such a great business, company based out of Switzerland. and they really gain dominance with large banks. So the customers we serve are mostly large banks, everyone from BBVA to HSBC, and more and DBS, I should mention as well in Singapore. They're a key partner. And the solution is really built bank grade. So everything from the level of security, offering, flexibility in terms of deployment model, hybrid on-prem or full SaaS. And then also a policy engine so that, especially for these large banks, they can really kind of customize the policies and governance of digital assets.
Not trivial to customize policies when you're a tier one global significant financial institution, GCFE like HSBC or BBVA. What's interesting about those three names is there's a strong Asian nexus, but there's also a Latin American nexus. And as you start to think about where stablecoins are strong, it's often outside of the traditional corridors in those cross-border rails. So I can see where those banks would be interesting. And do these two businesses sort of interoperate now? Is that starting to happen? I know these things can take time.
They take time for sure. And I would say, our vision is definitely for the infrastructure to tokenize, store, move, exchange. So some of the primitives we built for the payments business alongside custody for that all to work really seamlessly together. I would say we, last year started to achieve the integration between the technology, but also, the go-to-markets are a bit different right now. So we're talking about with payments, we're looking at more fintechy type companies, and with custody, large banks. However, there's definitely we're seeing the synergy or the opportunity within. I feel like the word synergy kind of gets caught in your throat if you're speaking in a business context.
It's one of those where, right. It means something. There's an overlap here that's useful, and synergy is the correct word, but something about it just feels wrong. I get you. I'm with you.
It was abused by marketers long ago, and we can't use it anymore. Anyway, for example, some of those like crypto native companies, like a centralized exchange, of course, they have digital asset custody needs, and then they also have some needs that we can serve around stablecoin conversion and off-ramping, to put it more simply. So yes, there's the opportunities there, and it's coming together. I would say the other thing that I get excited about when we talk to our bank customers who are using custody, they really want us to be their partner or advisor in thinking about our real world asset tokenization. Yes. Yeah, it's the buzziest thing right now. But all those use cases, payments is really foundational to any kind of, if you're going to be trading tokens, purchasing, all of it, you need that infrastructure to create liquidity and then also settlement to move the assets, from account to account. So I think that things that we have built in payments are very foundational for many different use cases that an FI would venture upon.
It's funny how payments off-ramping into fiat was where, maybe the last 3 or 4 years have gone and people have now started to see it. Now it's coming the other way, on-ramping into tokens from different types of assets that are more digitized or paper-based, whether they're securities, private credit, whatever, is people have started to get the joke on that. And maybe it's a change of US administration, but sort of having a partner who can help you tokenize that, who's already a service provider, makes sense. And advising on that, generally the hand-holding involved with a lot of this stuff is quite significant, not because the banks don't understand this. They absolutely do. It's just difficult, and there's a lot of people that you need to manage internally, so being able to help them do that makes sense. Then the third thing is, of course, RLUSD. This is probably the newest one. Why do you guys get into the stablecoin game? What was the kind of reasoning there, and what are your hopes for it?
Yeah, so having been facilitating payments for a long time, stablecoins became a really obvious need for our customers. Um, the way we have facilitated payments for our customers in the past is mostly through XRP, using it as kind of a bridge asset so that, the cross-border transfer happens really quickly and very low cost. However, digital asset, I would say like independent cryptocurrencies, crypto-based currencies, can be, volatile. So increasingly, customers have desire to use US dollar stable coins. I think the other thing too, because the other thing I should mention is, the composition of our customer base is a lot of businesses that are not in the United States. So places like Asia Pacific, Latin America, certainly Europe and the Middle East, but just taking the first two regions, there's desire for access to US dollars. Like stablecoins, stablecoins are very successful in crypto amongst, crypto users and to do any kind of crypto trading. But also just the simple use case of access to US dollars is a really big one. For those reasons, we have been using USD stables in our payment flows in a mix with XRP. So really, it was just recognition that, wow, this is a really big opportunity. There's going to be more and more demand for payments through US dollar stablecoins. Being a provider to companies of that service, it would make sense that we launch our own. And, also a recognition that the stablecoin market has been growing and it's going to balloon even more, especially seeing RWA tokenization on the horizon. It's going to only drive more and more demand for stablecoins.
You need the cash side of a transaction if you're going to buy it with something. Yeah. So what are you going to buy it with? Are you going to buy it with a Swift payment or some sort of stable coin? It makes complete sense. And you make a great point that I think sometimes in the US in particular, and somewhat in Europe as well, we get very locked into, well, this isn't useful to me today. But the question is, well, it's not about me. It's who's it useful for and why and when. And I think that if your customers are in those other parts of the world, being able to serve them, but also you have some relationships with some banks who could potentially, as Kai likes to say, every company needs a stablecoin strategy. And if you're already acting as an advisor on RWA, every company needs an RWA strategy. And how are these things going to start to come together?
Yeah, definitely have seen that demand from some of those banks we work with. I can say, SocGen is certainly forward-facing or forward-leaning on that. They issued a Euro stablecoin on multiple chains, and one XP Ledger being one of them, but multiple chains. I think they can see, the kind of more innovative banks are seeing that as something where I like what you said, that you need a stablecoin strategy.
Every company needs a stablecoin strategy. Every bank needs an RWA strategy. It's Kai Sheffield. He takes full credit for it. The guy's good at what he does. What can I say? We've had Société Générale on the show previously. They talked about this. We've had BBVA on the show. They talked about their work with Visa's VTAP. I think the European financial institutions probably felt like they had permission because of MiCA. But in the US, regulation has been a little bit less clear. But considering you're a US-based company, there's been a change in administration. Sort of what's your readout now as to what the opportunity looks like in the domestic United States for some of these technologies?
It feels like the floodgates are going to open this year, doesn't it? So within the past week, a couple weeks, so SAB 121 being called back or rolled back. Within, it felt like minutes, you hear from CEOs like Bank of America saying, we're all in. These are institutions that Bank of America was one of our early partners when we were doing kind of like the messaging software only payment solution. So we've worked with these types of banks for a long time, and the lack of clarity, and I think in the more recent time, even hostility toward, hey, like, using these assets and this technology is not okay. It's dangerous, which is not the best way to handle it, as we would say. But looking forward, I would say, yes, it seems like there's going to be a sea change this year. And even I could say post-November, the US election result, even just the ongoing conversations we've had with banks around being reserve bank or transaction banking partners for the stablecoin or for our payments business, like the tone and message changed overnight. Like it was quick.
The signaling is really powerful, isn't it? Like Nick Carter is famous for talking about Operation Choke Point. Now, whether that did or did not exist is largely not the point. The tone makes a difference in the business you can do, and the tone is set by the regulators and interpreted by compliance people. And there's an old saying that the Bank of England used to govern by its eyebrow movements, and I think it's not wrong. Like the tone is really, really mattering. But the opportunity there to do something, and for institutions, just for your daily business, to get access to bank accounts, to be able to make payments, to get banking partners is a huge unlock for just doing business, which, was being slow walked before, arguably. So what's your kind of like take on where this goes in 2025? There's talk of no more CBDCs in the United States, but there are CBDCs around the world. Like, what's your are we going to head towards a world where there are some CBDCs, some stable coins, or is that idea sort of starting to look passé now?
I believe that the future will have CBDCs and stablecoins. And I believe there will be, this is borrowing, Chris Larson was one of the co-founders of Ripple. He's our executive chairman now. But even when I joined the company, I remember he would talk about what's on the horizon is a Cambrian explosion of different types of assets and tokenization of different forms of value. CBDCs, governments, central banks are never going to cede their sovereignty over money. I think that makes sense. And I think a CBDC could make sense as a digitized system for a given country. I look at the success of PIX in Brazil or UPI in India as really game-changing for those countries and the people. I don't know if that's obviously that's not a exactly apples to apples analogy with the CBDC, but I just kind of, mapping inspiration from that. The thing is, so we worked on some CBDC projects with different central banks, and there's some really keen minds within these central banks who are forward-looking, but it's going to take a long time. And I don't know exactly what the roadmap looks like in terms of which countries adopt first. But in the meantime, I still think even in that future, having stable coins, will be a part of the picture. Because, liquidity and usage, there's a strong network effect to a stablecoin that has a broad user base, trust in the issuer, and a lot of liquidity. It's hard to displace.
It's an interesting question of what's backing the stablecoin. There were questions about Terra Luna and what was backing that. But then at the same time, there's been questions about Tether. But with USDC and a Paxos and an RLUSD, the model is a little bit clearer. And so what's backing it, number one? So what's the credit risk? And number two, what's the utility? If the utility is I can move money dollars cross-border, I can hold it in another country, I can off-ramp quite easily, then there's an ideal customer for that product. The ideal customer for that is probably not Bank of America, because they can move money cross borders. They're absolutely fine. But Bank of America and even the fintech companies in the United States don't have 24/7 access to Fed master accounts and the ability to move monies with zero credit risk. CBDCs could potentially in a wholesale world give them that. And so the market loves to create these or narratives. It's like CBDCs or stablecoins. But the world of payments has always had lots of different payment systems with lots of different people who have access to them. And the amount of money I move via Pix is very different to what I move via Fedwire, which is very different to something else. So, yeah, we love this either or narrative, and it never seems to kind of play out that way. But what do you see coming for? You alluded to it earlier, stablecoins and real world assets, because that's really getting into the institutional space. How are these things overlapping, and what are you seeing from your clients, from the market? Is that finally happening? Because this feels like it's been about to happen for at least a decade.
Yeah. I think it is coming up on its tipping point. We're seeing it with T-bills. Um, I think, well, rewinding to last year, BlackRock's Biddle fund has obviously been a success, and then you see Franklin Templeton follow, and um, many other, large asset managers. Uh, and I think what's interesting with tokenizing money market funds or T-bills, that kind of form of asset, is the efficiency that institutional markets can gain from posting it as collateral, where there's a kind of interest earning instrument now that's can be on a real time rail that's operates 24/7. And whether it's in institutional markets or in payments, you think about corporate treasurers, that need for 24/7. Sorry to like rewind the tape of what I'm thinking of. You said something earlier of if we're in the US or in Europe even, and we feel like, well, this kind of works for me, and yes, there's definitely parts of the world where the payment systems do not work at all for people. But even in markets across the world, there's these kind of maybe less noticed pain points of moving vast amounts of money, and it happens a lot outside of the banking hours. So I think that 24/7 value proposition resonates heavily in the world of markets and corporates, and generally.
It's not a relatable problem that I can't move a couple of $1 million after 5 p.m. But
Right.
actually, that can make a meaningful difference to your bottom line and your risk as a business. The thing that the 24/7 thing just sounds like, well, duh, like everything's 24/7. Well, wait, it's not. If I'm a global company like Tesla or SpaceX, and or I've suddenly acquired all of these dollars from around the world, or all of this currency, I want to get that into treasuries as fast as possible, because every minute I'm losing money. And this is when people get the joke of DVP and instant swaps between tokenized treasuries and stablecoins, is it is 24/7. Like, and all I need is compatible software and the right licensing. So the treasury management and some of the direct custody elements of that, like I don't have to send an instruction to somebody who'll wake up tomorrow to figure out to go do that. I can have access to it. It's democratizing what corporate treasury looks like, and the idea of bringing that to more people is hugely exciting. Where are you seeing that sort of take off? Is it more on the institutional side in the United States domestically? You're seeing it more with the banks? Because I always imagine the corporate treasuries and the PSPs might be the place that would want to do that.
Speaking to RWAs.
Yeah, and especially with the treasuries and kind of stables split.
Yes. So in terms of in which markets we are like hearing directly from that kind of user, more markets like Asia and LATAM. I think that's probably because it's not just the banking cutoff window that they're trying to compete with, but it's also access to dollars plus pricing. So there's kind of bigger pain points. So I think that's why we're probably hearing more from them. I think that more corporates around the world would adopt this technology if it was easier. Like, it's that problem of well, I'm not gonna like go through the trouble of figuring out. I've got enough problems managing my business. I'm not gonna go through the trouble of figuring out how to blockchain enable it. So, I mean, I think that is why a company like Ripple and there's many others in our space who are working on these problems. But like, we got to make it easy and put the software wrapper, the licensing, tight compliance controls within the product, so that they don't have to worry about it and they still get the benefits.
Yeah, I think about companies like Ramp and Brex and how they've democratized the ability to buy treasuries, but only if you're in the US. Like, it's kind of a standard feature. What happens if that goes global and the equivalents of the global Brex, the global Ramps, and all those guys? I think it can become something that Ripple enables for another distributor kind of thing. There's also the question a lot that people are asking about lately of ETFs. Will there be a Solana ETF and will there be an XRP ETF? Like, where do you stand on the opportunity for investors? And is there a likelihood here in the near future? Honest perspectives.
I honestly, I think that they will. I think more crypto ETFs will be approved this year. I think XRP will likely be, if not the next one of the next ones. I think now like 9 different companies have filed for XRP ETFs, like half of which have happened just this month.
Wow.
So I do, and especially with the administration change in the SEC, I definitely think this is going to happen.
Yeah, well, it's going to be an exciting year. I'm going to thank our sponsors, and we'll come right back to this, Monica, because I realized we've been chatting away now for a good old amount of time when I do need to thank our sponsors. So let's do that. This episode, if it isn't already obvious, is sponsored by our friends at Visa, the leader in digital payments. Visa's tokenized asset platform, or VTAP, uses smart contracts and cryptography to help banks bring fiat currencies on-chain, whether it's launching a stablecoin or deposit tokens or something else. VTAP allows financial institutions to issue fiat-backed tokens, improving financial efficiency and enabling programmable finance. Check out the links in this episode's description to express your interest in VTAP. This podcast is sponsored by our friends at BVNK. And if you've been listening to this podcast, you've probably heard us say, every business needs a stablecoin strategy. And if you're looking for the best place to start, that's BVNK. BVNK is the leading provider of stablecoin payments infrastructure, helping businesses move money faster, settle globally, and even launch their own stablecoin products. All with licensing and compliance so you can build with confidence. We're proud to partner with BVNK on Tokenized. To learn more, visit bvnk.com. Alrighty, thank you to our sponsors. Monica, you've been super helpful so far, but I want to jump in and ask if you're a bank, what does your digital asset strategy look like? I mean, we hear from Kai very often that you need one, but what does it actually look like?
Oh man, great question. And of course, the landscape of banks is textured and variant, so kind of somewhat will depend.
It's not one size fits all. If you're a community bank in the US, it's very different to global GSIFI and da-da-da-da, yeah. Totally.
But I mean, I think generally, actually, this is great to kind of go back to where we started. So we believe that what blockchain is providing is a modern financial rail, and it's not a flip of the switch. It's not going to just, replace all existing rails overnight. And I don't even think for the long term. So a digital asset strategy in 2025 does probably look like, first starting with where there can be real immediate utility that benefits your business. Taking, the U.S. Community Bank as an example, those banks, we've talked to them, their pain points are access to correspondent banking, access to being able to even provide cross-border payment services to their customers. Certainly, even if they can get access, is it at an affordable rate that makes sense? So maybe that's the entry point for that type of bank. for a larger GSIB bank, certainly, don't miss the wave here of digital asset demand, and starting with custody is an obvious entry point. But looking beyond that, you mentioned stablecoin strategy, RWA strategy. I think that's the next obvious place for a larger bank to play. My last point was, speaking of what was known as Operation Choke Point in the US, but we know that the way money moves around the world is through networks of networks. And so if I'm a bank, I'm definitely thinking about, how can I be forward thinking of onboarding crypto businesses and serving that type of client to be, well positioned as within this network of networks. And I'm thinking back to Signature Bank in the US and the Signet service that they provided, Silvergate. There's really interesting players in Europe like Banking Circle doing this. That would be very, strategically smart, I think.
Yeah, Clearbank does a little in this space as well. And I think that sort of ability to be the partner bank means you've got to get your compliance right. And you got to get your fraud and AML stuff right. And you got to be really kind of bringing your A game, because an administration could change. And if an administration does change, then future you is going to really hate that you didn't do that stuff correctly. And that's, it's why I work at Sardine. It's what we help a lot of organizations with. I think that sort of get the basics right before you move into it is always the thing I bang on about when it comes to strategy, is like, make sure you bake this in all the way through. Because I've seen that movie play out twice now. But you talked about kind of starting at custody and then stables and RWA. Stables and RWA look different for different institutions, but have you seen any of the banks start to move into the stable space, even if it's just providing accounts for it, in outside of Europe? Because I know SocGen does it, I know Banking Circle does it. Have you seen that anywhere else in the world? Is it starting to happen?
So I think of DBS in Singapore, APAC. So they are definitely, more forward thinking in terms of working with crypto native businesses. They have their DDEX exchange. So I think they're probably one of the first large banks to provide a digital asset exchange like that. I'm thinking down in Latin America. I know that there's it's not coming to me top of mind, but I'm sure there's those examples in Latin America as well.
Yeah, so I know Nubank has USDC available to all of its sort of crypto clients. I also thought about Standard Chartered, and they have Zodia Custody and Zodia Markets. And, if you speak to anybody in stables, Standard Chartered is the name that comes up quite often as a major player in that stablecoin space. So what do you think the next sort of 6-12 months look like for Ripple, other than trying to hold on to the rocket as it grows up? Like, what's on your to-do list for the next 12 months? Is it going to be new products? Is it going to be new markets? Or is it just going to be execution?
Primarily execution. I really, what we talked about at the top of the show, of bringing together this end-to-end infrastructure, that's going to be our continued path. We've charted it. We're going to just keep, marching ahead on it. Growth in the business across all those different segments we talked about. Ripple Dollars, actually, I know we've been talking about it for a while. It just launched in December. And so, that's a big area of focus for us, is growing, adoption, distribution for Ripple USD. And Brad has said this, Brad, our CEO, Ripple is a unique company in the landscape, in that we have a lot of buying power right now. And so certainly, look for us to make interesting movements on the strategic partnership or M&A front to advance our mission.
Yeah, it's going to be fascinating to watch. Okay, so yes, I can imagine as an outside observer, I'm looking at the payments industry with my Money 2020 background going, yep, that one, that one, I'd be definitely, to your point about the last mile distribution. That is something that the payments industry has a lot of, but people don't often know where to look. It's a bit of an interesting game. I want to move into a little quick fire round. What's the one thing everybody gets wrong about Ripple that you find yourself correcting them most of the time?
Uh, uh, Conflating Ripple and XRP.
Hmm.
Meaning
And
yeah, sorry, go ahead. This is quick
no,
fire. I
go
won't
ahead.
explain it.
Yeah, no. What are your thoughts on the XRP army?
I mean, I think it's a like one of a kind community, like very uh global, very tight knit, and really enthusiastic. Yeah, they're highly engaged.
That's for sure. Where do you think social networks like X play into the future of stablecoins and everything else?
Oh, interesting. Well, we know that X is working on, X money and kind of
Hmm.
has aspirations beyond being a social media platform. I think kind of, let's call back to Facebook's Libra project. Um, when you have a massive global installed base of users, um, I think it makes sense to think about, well, these users need to transact, they need to with each other, with businesses. And with Elon Musk at the helm, we know that he is a crypto native himself. So I think there could be some interesting things happening there.
Yeah, funnily enough, you mentioned SARP 121 earlier, and I forgot to say I wrote it down. That I think in their earnings, Tesla reported at least 340 million, sort of better off because of that accounting change, because of how it was marked to market.
Ooh,
Uh, that's meaningful, isn't it? I imagine the
yes,
same for Block as well, and others that held it on their balance sheet. That what one accounting
MicroStrategy.
change can do. Accounting really runs the world.
Wow.
Have you paid attention to, and what are your thoughts on the AI slash crypto kind of wave of hype that's just been?
Yeah. And the area that I've probably poked around the most is agent to agent payments. And there's, I think some interesting companies working in that space. So yes, I would say kind of like keen interest. Definitely want to learn more.
See how it goes. We did an episode a couple ago on AI 16Z and all of the
Uh-huh.
craziness. We did our best to try and unpack it and explain it because there's just a Cambrian explosion there in and of itself, and there's DeSci and countless other things happening at the edge. And then meme coins. Where do you stand on meme coins?
Meme coins. Meme coins are a lot of fun, right? People have a lot of fun with them. Uh, Honest take. I initially looked at them similar to how I felt about ICOs in 2017, and I felt like, come on, this is not right. People are taking advantage. These are rug pulls. These are not real businesses. And I kind of looked beyond them. And then I think because I mean, I think the ICO boom made Ethereum like that created this unstoppable flywheel effect of users, adoption, developers, builders on Ethereum that really brought it to where it is today. And so I don't I think meme coins can serve a similar purpose of creating that unstoppable flywheel effect for different um, blockchains, bringing mass amount of users and more developers and liquidity and money into the ecosystem. I also think you had some advisories at the top of the show. Buyer beware. I would be very thoughtful. But I mean, I think there's really vibrant communities out there of, people who are connecting with each other and it's healthy and fun.
Yeah, from the soup of crypto often crawls innovation, even if it looks a bit weird at first. This is very much the case. Last but not least, what have I not asked you that I should have asked you?
Oh, we've covered a lot of good ground, Simon. What have we not talked about that would be on my mind? One thing, uh, and I mean, a big part of the company is working on it this year is just like, where does XRP Ledger go? Um, so it's one of the OG blockchains. We talked about that. One of its biggest innovations, aside from this novel consensus mechanism, was that the creators created the first decentralized exchange on the protocol itself. And that was their vision was payments. It was like, simply put, back then, gateway operator issues an IOU onto the ledger, and there's markets created around it. And now this is like a peer-to-peer system, fast free payments globally. Now, of course, those issuers need to be licensed and frankly, the IOUs are really today what we would call stablecoins or tokenized assets. And so we're kind of going back to that original thinking and really leaning into institutional uses of this blockchain. It's, of course, open there's lots of non-institutional users building on it, but that's in terms of, the work we do, the amendments we propose to add new features, it's going to be really mostly around institutional finance.
Yeah, funny how you can come full circle. That like actually, sometimes the idea is right, the market wasn't ready, and that's to be able to stay the course. Quite fortunately, you've had a business model that's really quite different. That's kind of carried you there to be able to get there. And then that was kind of all I had for questions. I asked you kind of everything I'd ever wanted to ask. So this was awesome, and you just went everywhere. So I really appreciate it. If people want to find out more about any of the things you've mentioned, payments, custody, all of that kind of stuff, where do they go and find out more about you and more about some of the products?
I think Ripple.com is the easiest place to go to kind of get the full gamut of what Ripple's all about and who we are. I'm on X, so you could catch me there.
Fantastic. Well, listeners, I hope you've enjoyed this. I've really enjoyed this conversation with Monica. Super open, super easy to talk to. And you can find me at SY Taylor on Twitter or Simon Taylor on LinkedIn. And if you haven't already, I got to remind you to subscribe, tokenized on Apple or Spotify or wherever you get your podcast. And if you enjoyed it, why not leave us a review? It helps us out. Thank you, Monica.
Thank you so much, Simon. This is a pleasure.